Hey there, everyone. Welcome back to another episode of the Caderna podcast. I'm your host, Brian Caderna. So this week we'll be featuring another special guest, very well known in the world of finance, and that is Dr. Richard Smith, also called the Doctor of Uncertainty. Dr. Smith is a fintech entrepreneur, the CEO of the Foundation for the Study of Cycles, and author of the Risk Rituals newsletter. He studied mathematics at UC Berkeley and has a PhD in systems science from the Watson School of Engineering. He can be seen regularly in Forbes magazine, on CNN, Marketwatch, and many other media outlets. In today's conversation, we spend quite a bit of time discussing big tech, the latest congressional action to rein in the most dominant companies in the world, the use of user data, and the effect thereof on the stock market. His upcoming book is called The Risk Manifesto. On another note, I would like to apologize if the audio doesn't sound quite so good on my side, as we did have a technical issue with my microphone, but I'm sure it won't get in the way of a great interview. So without further ado, please join us with Dr. Richard Smith.
Is going to require work and time and sweat and toil.
If money wasn't an issue, what would I be doing?
Don't worry about it. You'll figure it out.
Change is the only constant.
The Caderna Podcast.
So Dr. Smith, welcome to the show.
Thanks very much for having me, Brian. Looking forward to our conversation.
Yeah, it's my pleasure. I mean, there's so much that you've commented on through your newsletter and then in the media that the markets right now, I mean, I don't think we could have a better time between what you're seeing with the new Delta variants and big tech and the spending. I'm like, anything you could think of that would throw the markets all over the place, we're having it.
There's a lot going on, that's for sure.
Yeah. What do you see, maybe just to start there, what are you seeing right now as maybe the biggest factor that's moving the markets one direction or another?
Well, I actually started my interest in investing and trading in the area of seasonality. So I'm not sure if you've looked into seasonal patterns in markets. You've probably heard of sell in May and go away as a sample. But there are, seasonal patterns that repeat year after year in markets. I mean, it sounds overly simplified, but it keeps happening year after year. One of the strongest ones is if you buy, the market around the end of October and sell in early January. And something like over the last 100 years, this has produced 90% winners. So right now, we have a period of seasonal weakness in late July into early August. And I think that this, what we're seeing right now is fairly predictable in terms of the typical seasonal weakness that we see in the summertime, especially in late July and early August. So I'm not surprised to see this at all. But then, the media has to go and make up a story about why, we're seeing a correction in the markets or a rally in the markets. And they grabbed onto the Delta variant story with the recent correction that we had, only to have that story disappear the next day when the markets rallied, right? So, hey, it's tough to be a financial journalist. I sympathize with them. But still, I think what we're seeing is something that we typically see around this time each year. So,
yeah. And I wanted to ask you about that too, because I often comment on the media. It's like, it's frustrating sometimes because you turn it on and every day it seems the market is surging, the market is roaring, or the market is crashing. And it's like, you look at, the little ticker and you see that the market's up 0.32%. And I feel like, we kind of ought to reserve some of these verbs for real occasions and not just the everyday occurrence. But I guess, that's what the media is in the business of doing, is just trying to shock the viewer or the reader and lure them in. And I think a lot of people get confused by what's really going on in the marketplace.
Well, I think the confusion is on purpose. And I think this is a bit of a pickle that we've gotten ourselves into as a society. I wrote an article recently that I titled The Day the Internet Died. And it's a dramatic title, but what I said was the day the internet died was the day that Google decided to monetize its search algorithm with advertising dollars.
Hmm.
And so that model is the model that drives the big tech attention economy that we live in right now, which I also call television 2.0. The internet today really is a form of television. And it's a form of television that the broadcast networks could only ever have dreamed of in their wildest imaginations, because before the broadcast networks had to like hire people to go sit in your home, like from Nielsen, and
Yeah.
find out what you were doing, what you were watching, and how you were reacting to it. But now, with technology being what it is today, with the surveillance capabilities of these big tech companies, they're able to basically track the movements of our eyes and, the way we linger over, some section of a page, how long we spend on it. It's just, phenomenal and kind of terrifying when you think about how much they're able to influence our behavior, and then that ultimately we're not their real customers, right? We're their users. Their real customers are the advertisers. And so media companies, have to fight like everybody else for attention. Attention is best captured when you're sensational. And, so to me, that is a real predicament that we're in our society, because I don't think it really encourages common sense or reflection or long-term thinking, and long-term value creation at all. So
Yeah,
real
I would
uphill
agree.
battles in today's world.
I think you hit the nail on the head. And I mean, it's difficult to be a rational investor when you're just bombarded with what are kind of irrational thoughts all the time that are just seeking your attention. And I
Yeah,
love that.
and they're all trying to sell you something, right?
It's true. Yeah, it's like there's a motive. Everywhere you turn, there's a particular motive. When did that happen that Google did that they began to kind of monetize that algorithm?
It was in probably around 2000. I don't know the exact date, but it was around 2000 or 2001. And I was an early internet user. I was in graduate school back then, actually. I've been using the internet even before the World Wide Web stage, and I remember it well when Google made a very epochal decision, let's just say, to finally earn a profit through advertising. And then Facebook followed. I don't know if you saw that documentary on Netflix, The Social Dilemma. It was pretty
No.
impactful. It was the number one movie or video on Netflix for the whole month when it launched, and really created quite a stir. It was put out by a group called the Center for Humane Technology, which implies that technology today is not humane. And this, the guy who founded the Center for Humane Technology was a Google, not executive, but a developer, and hooked up with a guy who wrote the book called Zucked, who was an early investor in Facebook. And these are insiders who were criticizing Facebook and what Facebook has become. And Facebook, got their model from Google. So that is the internet and the world that we live in today, where you have these platforms, right? And then you have media distributed on the platforms. And the job of the media on the platforms is basically to kind of polarize people and to engage them and capture our attention and keep it there for as long as possible, right?
Yep.
And they're using behavioral psychology basically, BF Skinner work to figure out, how to train us and how to capture our attention and hold it for as long as possible, because that's what drives valuations in the markets. And incredibly, I just was looking at something the other day. The top 5 companies in the market today are, Amazon, Apple, Microsoft, Facebook, and Google, with Tesla being number 6, right? So,
Yeah, it's a tech-heavy world that we're living in.
so, and that's not just tech, right? I mean, there's a lot of tech besides Apple, Amazon, Facebook, Google, and Microsoft. They're really software companies, right? They're not really, they're not like making microchips, right? They're not. So it's just, it's a really interesting time that we live in, to say the least.
Yeah, no, I couldn't agree more. And it seems as simple in a way, like when you phrase it the way that you did, that, ultimately they're trying to attract your attention, keep your attention as long as possible, and then they can sell more ads based on that. It seems like a formula that's existed since the beginning of advertising. But the internet obviously has made it so different. I don't know, it's almost hard to remember what it was like before the internet, of how we kind of digested information every day.
Yeah, absolutely. And look, I'm not a Luddite, and I'm not saying we can go back to a better time in days gone by, right? But the pace has been picking up, and I don't think it's going to slow down anytime soon.
Yeah, it's interesting. And that kind of brings up another question I had. I don't know if you saw the article, the op-ed that Trump had wrote in the Wall Street Journal. I think it was maybe 2 weeks ago, about why he was suing big tech. But it's interesting. It goes on with one of the points you had emailed me about was with the House Judiciary Committee passing some bills or moving forward with bills to try and curb the power of big tech. Can you tell us a little bit of what's happening, or is this all just kind of fluff? Like, is this going anywhere?
I don't think it's fluff. I do think that there's a serious movement to rein in big tech, let's say. It's about the only bipartisan topic that I can think of in the past 10 years, frankly, right? Other than spending more money. But so, I do think that everybody realizes that things need to change. The question is whether or not that bipartisanship can really survive long enough, in today's polemical environment, right? To actually get some legislation done. So I am cautiously optimistic, because I think something simply has to be done. And I think that pretty much everybody knows that. And, so I'm cautiously optimistic.
Okay. And what would that look like if these go through? Because I think there's kind of 2 narratives here. You hear a lot of people saying, Amazon could be a monopoly. Like, do we try and start identifying monopolies, breaking up monopolies, or preventing them? But then, like what Trump was going after and got a lot of attention with the lawsuit and then the article, that had not much to do with that, but more so to do with censorship. And that technically the Facebooks, the social media empires, that they're news outlets, and they're not governed like news outlets, even though that's where so many people get their news. So what are, the House Judiciary Committee, what are they trying to do? Which are they attacking, or are they going after all of that?
Well, I think the House Judiciary Committee is more focused on the issues of the platforms themselves, right? That Amazon is putting, is basically inviting businesses onto their platform and then learning about those businesses and then developing their own products to displace those businesses, so that they're getting competitive intelligence from from the users, the businesses that are on their platform, and then they're coming up with competitive products, and they're using their heft to basically expand into other markets. There's also the concern about like Facebook acquiring Instagram and WhatsApp, for example. So they're big companies with massive, cash hoards are essentially buying out competitors. So that's another one that's a concern. There's a law or proposed law about putting the burden of proof on the companies themselves when they want to acquire a competitor, to prove that this is not, anti-competitive, instead of the regulators having to prove that it's anti-competitive. So those are all platform issues, basically, that, Amazon, Facebook, Google have too much control of the marketplace through their platforms, and are using that leverage and that privilege to abuse their position and basically have monopolies with their platforms. So that's one big issue that the House Judiciary Committee is looking at, with several of the bills that they've put forward at this point.
Okay. Interesting.
So the other one, though, that really interests me is what's called data portability. So
what does that mean?
Right now you're on Facebook. If you leave Facebook, you don't get to take your data with you and take it over to, another platform, right? So this is, to me, what is really not well understood. So I believe personally that the power of the big tech companies comes from the data that they are able to accumulate and the intelligence that they're able to extract from that data. And that it's really their collection of data and what they're able to glean from that data, the proprietary ways they're able to use that data, which is the real source of their power. So, why is Amazon buying a movie studio? Is it just
to make more money?
Is it just economies of scale, right? I don't think so. So I believe that they're buying a movie studio because they get phenomenal intelligence on their users by learning which movies they like, how long they spend watching them, how long they spend watching movies in general, right? And think about how that can then influence their ability to sell other goods and services and advertising to those users. Now that they know what movies they watch, they know what we buy, they know what movies we watch. They know, when we're online, they know what we're talking about in our homes. All of that is just phenomenal amounts of data and a phenomenal power and a phenomenal, resource that they have for ultimately subtly and sometimes not so subtly redirecting our behaviors to their profitable bottom line.
And now, what I guess what the contrarian would say is, well, what's so bad about that? If previously in history I had to shop around and kind of find out exactly what it was that I wanted, if now a seller can almost identify for me what it is that I want. So I log onto my computer and, oh, there's the new skis for an intermediate level skier, and that skis in the Northeast in icy conditions. Perfect. And immediately I have that at my availability. Is that a bad thing, or what could be bad about that?
Well, first of all, I believe that they're able to actually influence what we think we want, right? So they put things in front of us that we might not have known that we wanted, right?
Yeah.
And so that's a pretty big power, right? And then additionally, once they're able to really control that narrative, then they can reduce the quality of those products. That's one of the things we've seen with Amazon. There's been a incredible, explosion in third-party sellers and stuff coming from all over the world of questionable quality. But because Amazon's the only place we go anymore to buy stuff, right? No longer do they have that competitive pressure on them to deliver the best products, because we're all there, right? And if it says Amazon's choice, then hey, that we do it. So that's an incredible power. And there's a new head of the FTC, right? Lena Khan. And she wrote a 100-page note, it's called, in the Yale Law Journal, I think, called The Amazon Antitrust Paradox.
That's a long note.
And it's, I skew conservative myself. And, obviously, I don't think she's particularly conservative. And she's young. She's like 35 years old or something. So she's a millennial herself, right? But what she points out is that, I think she has this often quoted line in her note saying, it's as if Jeff Bezos, studied antitrust law and designed Amazon to, circumvent modern antitrust law. And so you think about, Amazon is always focused on price and lowering price, right?
Yeah.
Well, if you can lower price and you can lower quality, right? And people can't tell that you're lowering quality because the competitors who could say, hey, I've got better quality, are no longer visible to you. That's a unintended consequence of an exclusive focus on price, that has allowed Amazon to become, the market, dominant market position that it has today.
It's a great point. I mean, that it all comes back to square one of eliminating competition. And
so getting back to the data portability idea, right? Now imagine you could go to Amazon, and you could say, you know what, Amazon, I want to take all the data that you've collected on me, and I'm going to decide who can see that data. So what if I could go to Walmart, and Walmart could offer me an incentive to move my data from Amazon over to Walmart? That would produce a lot more competition in the marketplace, because I think Amazon has an unfair advantage by the amount of data that they've collected. And I don't think that they're transparent about it. I think that we are completely naive about the amount of data that is being collected on us. And, I personally believe, Brian, that there should be something akin to the HIPAA laws that we have in medicine, where you control your medical records and you get to say who those medical records go to or don't go to, right? And I think we should have something similar when it comes to our online data. So,
have you seen anyone else? I mean, that's really interesting. Have you seen anyone else that's kind of adopted that thought? Do you have other peers that are on board with this?
I have seen other people mention something like HIPAA laws for data. So I don't think it's a widely held position right now, but I'm not the only one who's suggested it. But I really do think that there's incredible power in the data that we're generating. We all sign these in, unreadable terms and conditions where we basically sign away everything that we do on these platforms. And I would love to see the government actually create a public utility where we could all maintain and control our own data and be in control of what vendors and services we allow to interact with our data. I think that would put, incredible power back in the hands of consumers that I just don't think we realize how much big tech knows about us, how deep and extensive the surveillance and the insights are, and how that's subtly influencing our behavior every day. And just to bring this back to finance for a minute, I think this is what's happening with Robinhood. So Robinhood is, a financial technology company out of Silicon Valley. Okay. And it has imported this free services model into the retail broker dealer marketplace, right? Free trades. Yep. Robinhood started the free trades. Robinhood's customers are not its users. Robinhood's customers are the market makers like Citadel Securities and Susquehanna and Virtu, who pay Robinhood for the orders that they execute on behalf of Robinhood's customers. Okay.
I'm pretty familiar with this, but can you perhaps kind of dumb that down for some of our listeners that aren't totally certain, like what a market maker is and the connection between like a Citadel and a Robinhood?
Yes. So if you go onto Robinhood and you're going to buy, one share of Tesla for $650 or whatever it is today, then Robinhood has agreements with certain market makers, and these are it's not the stock exchanges. It's not the New York Stock Exchange. It's not the NASDAQ. These are companies like Citadel Securities is one of the biggest, and they will actually fill your order. And there are some constraints on how they will fill your order. They have to do it at the national, something, at least as good as the national best bid offer. So, so they have some constraints on, the range of prices that they can execute your trade at, but they actually are the ones who sell you the shares or find somebody else to buy, to sell the shares that you want to buy.
Correct. Yep.
And, we could spend a whole hour talking just about this, right? So yeah. I don't want to go too much into the nuts.
No, we can get back to the data. That's fine.
What's really remarkable, and I'm pretty sure, Brian, that this is unique to Robinhood, that they get paid by the market makers a percent of the spread between the bid and the ask. So the bid is, what somebody's willing to pay to acquire a share, and the ask is what somebody's asking to sell a share or an option, right? So Robinhood gets paid by the market makers a percent of the difference between what somebody's willing to buy for and what somebody's willing to sell for. That's called the spread. So based on that simple fact, Brian, that Robinhood gets a percent of the spread, what are they incentivized to do?
Essentially have a larger spread there.
Have a larger spread, right? Yep. So,
which is essentially
some
inefficient
of the
trading,
largest spreads we've seen in history were on GameStop during, the week or two in January when GameStop went absolutely berserk, right? Went from like $10 to $400. And then you had options trading on GameStop, which is even wider spreads. And so this is to me, a profound illustration of this principle that Robinhood's users are not their customers, right? And that Robinhood is basically able to direct their customers into actions that are highly profitable to Robinhood and of questionable profitability to Robinhood's customers. And I think
that's something, not to interject, but I don't think less than 1% of the users or investors on that platform would understand that or realize that. And
That's
in
right.
pre-Robinhood, before this has kind of made some headlines, I don't think anyone really noticed that, whether they went from one platform to another, that there is that opportunity they could accidentally be buying at a higher price than their peer on another platform. I mean, I don't want to go down a whole nother rabbit hole, but you would think there'd be more strict regulation as far as what I'm seeing is the best price I can buy at this particular moment in time.
Yeah, I don't actually think that Robinhood's customers are getting worse execution than other platforms. Um, and there's plenty of arguments that are made that these market makers provide a great service, that they save retail investors money on the execution costs, right? Retail investors get a rebate. Robinhood gets a rebate because these market makers are able to give better prices than, say, somebody would get if they went straight to the New York Stock Exchange, mainly because the New York Stock Exchange, their minimum spread is a penny, right? So they can't trade, in increments less than a penny. They can't buy or sell, right? But market makers can. So they come in and they do fractions of a penny, and they kind of undercut the exchanges in that regard. So if you look at it technically, hey, Robinhood's customers made all these trades, and they got a better cost of execution from the market makers than they would have if they went straight to the stock exchange. But this is a, red herring argument, because would Robinhood's customers have made all those trades in the first place, and would have they been trading those specific things that they're being, gamified into trading by Robinhood, right? If they hadn't been in that Robinhood environment in the first place, if Robinhood's business model hadn't been, payment for order flow as a percent of spread, then would Robinhood really have been incentivized to make it, super easy to trade GameStop or options on GameStop, or to give you a free share of GameStop, when you become a customer, or to, present options to you, even though you're a totally novice investor that's never traded options before, but it's so easy now, they make it so easy. Access does not equal success.
Yeah.
Like it's like saying, you're going to go to the World Series of Poker, right? And because they're going to get you a seat at the table, for free, that means somehow you're going to make money. No, you're going to get your clock cleaned, right? And so access to the markets has very little to do with success, and it's actually, primarily about monetizing the ineffective behaviors of their user base, for the profit of others.
It's so interesting. I mean, I know we've touched on two things that are somewhat related in big tech and in Robinhood, but it seems like you're drawing a connection here that both big tech and Robinhood are kind of, I don't want to say using their customers, but they kind of are using their users to have other customers.
They are using their users. And there's another saying that there's only two industries that call their customers users. One are, drug dealers, and the other is big technology companies.
Wow. So it sounds like you're not a fan right now of big tech. Is that safe to say?
I am not a fan of big tech. But really, in the end, Brian, we've done this to ourselves, right? We've opted in for the convenience. We've taken the bait of free. And the only thing that's going to lead to really effective change, is if people really start taking more personal responsibility, more accountability for being aware of how the online world really works, and choosing to go with service providers that aren't using these deceitful practices, to monetize us in ways that we don't understand.
And I feel that that's almost easier said than done.
Oh,
Where,
it's absolutely easier said than done.
yeah, I'm almost like, how do you work around it? I mean, for instance, just recently, we had a family member, we sent a list for our daughter's graduation, like some gift ideas on Amazon.
Yep.
And he pretty much just said, don't send me these, send me something else. I'm not using Amazon anymore.
Mm-hmm.
And we were almost like, I don't know where you go then. And
Right. Yeah.
it's almost like, how do we rewind the clock so far to get back to where we can make other choices that aren't going to disrupt our lives?
Yep. It's going to involve some sacrifice. It's going to involve a little pain. But I think that, as we come to understand more and more what's really happening, how choice, even though it seems like it's proliferating, is actually, constricting. I think more and more people are going, you know what, I'm not okay with this. And, I need to start doing something about it, and we see what's happening with children, I mean, it's like suicide rates among teenage girls gone up almost lockstep with Facebook's user, rates.
Yep.
Like that stuff is crazy. That's not okay, and society is gonna wake up to this. I think they already are starting to wake up to it somewhat. So the fact that The Social Dilemma was such a huge hit on Netflix was encouraging. Meanwhile, the irony of it actually being on Netflix was, not lost on some of us. Yep. I canceled my Netflix subscription because I just am not comfortable with the way they run their business and with the, the sleight of hand that's so fundamental to their economic enterprise, right? And that's what really concerns me the most, is just the deception and the sleight of hand of it all. Mm-hmm. And I long for more transparency, and that's why the data portability, which is probably the least likely to succeed, because a big part of how technology got to be so dominant today is because of national security issues. People don't realize how important national security is in big technology companies. You see China cracking down right now on its big tech companies. And a big reason is because those tech companies have data that can be used to get intelligence on the Chinese government and on the Chinese military. There was a story in the Wall Street Journal last year about a group of graduate students out of the University of Alabama, I think, who, using just like marketing data apps, were able to like use geolocation data to track the movements of Russian generals throughout Eastern Europe, and were able to give intelligence to the US Department of Defense on movements of Russian generals that even the US Department of Defense didn't have. And this all came out of public domain data that basically helped you do targeted marketing using Facebook and using geolocation. We're able to actually see movements. So there are national security issues. The government part of, back after 9/11, it was, hey, we got to find a needle in a haystack. Hey, Google, the surveillance that you're able to do is really incredible. We should collaborate so we can make sure we don't get another terrorist attack, right?
Yep.
So these are tough issues. They're tough, and I'm not saying I've got all the answers by any stretch.
Well, these problems are so complex, I don't think anyone would have all the answers.
No.
But that even brought to mind, as you were saying that, it was, I can't remember the incident, but where the government wanted to get into, I guess it was the attackers, or I don't know if it was the Boston Marathon bombing or something, where they wanted to get into the iPhone.
Right.
And Apple would not allow the government, to get into the iPhone.
Right.
And there was that, I guess that was maybe a few years ago. I can't quite pinpoint the issue, but
Yep.
yeah, that was a great example of big tech colliding with, the government there.
Yeah, absolutely. And so, these are real issues. They're existential issues for how we're going to, be organized as a society and where power is going to, reside.
Yep.
And I think they're issues that everybody, really should spend a little time educating ourselves about. Um, what are these bills? Read, it's a kind of a big book, but if you haven't read Shoshana Zuboff's book, Surveillance Capitalism, that's an eye opener. Surveillance Valley is another one that's shocking. And so I think it's really important that we understand these issues. My biggest fear about what's going on in Congress and the legislation is that it will, ultimately be defeated by just, um, muddy politics
Yep.
and the mud wrestling of politics.
And
And
that's something I know we don't need to dive headfirst into a
yeah,
political debate of any sort, but
right.
it does seem, and correct me if I'm wrong, I think this is kind of obvious that if you look at the big tech companies, these are the richest people in world's history. You talk, the Gates,
Yeah,
the Bezos, et cetera.
yeah, yeah.
It seems like one common theme amidst all of them is they're pretty far left, which
Yep.
almost seems kind of like a contradiction of sorts, that you have
Mhm.
people with a liberal mentality
Yep.
that are, I don't want to say socialist, but they lean in that sort of vein. And they then on the other side are almost like the greatest capitalists that ever lived.
Yep.
It's just so contradictory. And I don't know if there's a point to that, but it's just an odd observation, almost like a guilty conscience that could be there. And what effect does
Yeah.
that have on the whole system when it's kind of like how they used to say, oh, Hollywood's all liberal, they garner so much spotlight for a liberal cause. Now it's not like Hollywood to the left or Wall Street to the right. It's big tech, like you said, and they all seem on the left. So how does all that play out?
I mean, that's where these concerns about censorship come in, right? And then you combine that with media, which is also biased to the left. But a lot of this comes out of the academic institutions, right? That teach this um, basically socialist philosophies. And and then yeah, you have all these people that make all this money and feel guilty about it, and that they need to do something to, you help others, right? So that's really kind of antithetical to the idea of individual freedom. Um, these are really more kind of collectivist approaches to organizing society. And look, like I said earlier, these are tough questions because there are incredible um, national security issues, and we have the most dominant companies in the world coming out of the United States. What does that do for the United States? So I'm not saying that there are simple answers to these questions, but it certainly does lean that way. And I think that we need to start to lean back more in the direction of helping people really to learn to think for themselves instead of telling them what to think, and um, giving people power, like control over their own data, for example,
Mm-hmm.
would be an incredible reversal of the trends that are happening. And I think that's a big part of what is driving the cryptocurrency community and the decentralization movement. This idea of more custody of our digital assets, more privacy. So I do think that things are happening that are helping the pendulum, swing a little bit away from the overly centralized um, and semi-socialist world
Yeah.
that we're seem to have evolved into, especially over the last 20 years.
Yeah, and I wanted to ask you too, like, is so much of what we talk about these American companies of Amazon, Microsoft, and Apple, but it is a global issue. I mean, if
Yeah.
you think China's the other superpower, and Russia seems to just kind of be this force that's always annoying us or hacking us, and
hmm
are they? You alluded to it a little bit earlier on, but are they experiencing similar issues? And because they're such a different country than a more capitalist-free America, and then you have over there just communists. But it seems like their big tech is almost perhaps interjecting a little capitalism into a kind of a communist government.
Yeah, but it is a one-party government, and the things that they're able to do because they don't have the legal infrastructure that we have here in the United States um,
Hmm.
are a bit jarring to those of us from the West. So,
Sure.
but yeah, these are big issues for them. And they have legitimate concerns about the US government's ability to use these big tech companies to get, surveillance on other countries. So one of the shocking revelations in Surveillance Valley was that the Tor network, I don't know if you've heard of Tor, the onion router,
No.
supposedly this, hyper secure internet where nobody can track you. And, it was actually invented by the US government as a way to, have especially like foreign operatives be able to communicate over the internet in hostile countries. So uh, the internet is a military technology. It came out of the military. It still has military applications today. And, the world is not one big, peaceful, happy family. So the internet is always going to be part of a military calculus. And, that makes it a fundamentally thorny and difficult issue to really wrap our heads around and not get kind of um, seduced into simplistic uh,
Yep.
positions.
Yeah, no, I think that was well said. And maybe one more thing, if I could add or pick your brain
Sure.
on. I know we're talking a lot of tech here.
hmm
I'm not sure if you saw on 60 Minutes, guess it was a couple months ago, there was this special segment on the semiconductors, and how almost the overwhelming majority, especially the very advanced ones, come out of Taiwan.
hmm
And US and China, the big two superpowers here, kind
Yep.
of fighting for as much of this semiconductor shortage as they can get their hands on.
Yeah.
What does that hold for the future? I felt like there were a lot of parallels with that current day dilemma and some past instances we've seen in oil, with kind of a fight to who can get to oil. It's that liquid gold. I feel like that's what the microchips have become, almost to like a Taiwan.
I think that's true. I think Taiwan is a real hotspot in terms of what's going on globally and geopolitically. And I think that, part of the lesson of the pandemic has been that these global supply chains um, are a little more problematic than everybody realized. And so I think these supply chain issues are going to be with us for a while. I think supply chains are being restructured. And I think that the world is increasingly realizing that supply chains are actually national security issues. So, I don't think it's gonna um, all the globalist tendencies that we've been that have been developing over the past few decades are going to be swept away. But I do think there are adjustments underway, uh, and people are rethinking supply chains from a national security perspective. And Taiwan semiconductor manufacturing is right at the nexus of that restructuring for sure.
Yep. And so is that to say, like, whenever we become too dependent on something vital, too dependent on another country for that vital resource, that
Yeah,
we've got to quickly make it ourselves? Is that the solution? Or
I
just
think
make them our best friend?
I think that it's going to be some of both, but we definitely can't be in a position where um, we can't get the semiconductors that we need to run our economy and run our military because they're being held hostage by a hostile foreign government. That's
Yeah.
not going to work.
Yeah, no, I agree. Yeah, it's just there's so much going on. It's you have a conversation like this, and sometimes it's exciting, other times it's just scary of so many different factors at play.
Yep.
So
So it's an interesting time, but it's also an exciting time. I think if anybody, these are complicated issues, but they're meaty issues, right? And they're consequential issues. And it's great to be able to dig into them and wrestle with them and then, in the small ways that we can to try to help create the future that we want to create. And I think that's one of the important things that we need to think about more as investors, right?
mhm.
Is how we allocate our capital. And does it really reflect our values or not? Like think about all the index investing in the S&P 500, for example. So
Yep.
I can't do that anymore because I'm not comfortable with the dominance of big tech. And they make up over 20% of the S&P 500 at this point. So if I put my money in an index fund, I'm investing in big tech.
Yep.
If you don't like Monsanto, for example, and you want organic food, you can't be investing in the S&P 500. So I think there's an incredible opportunity for people, this interest from young people in the markets is really exciting.
Mhm.
Um, and I would just encourage us all to, see the markets as, I'm not saying it's exclusively a place of social activism, but I do think that our values and the future that we want for ourselves and our children is something that we have to think about as investors and have be part of our calculus, and not just um,
Yeah.
how much money we're going to make, right?
And that's another tricky one. I'm glad you kind of segued into that. I know we talked earlier about, vote with your dollars,
Yeah.
but that's almost difficult to kind of act on, to say, I don't want to put my money here, even though that's where I'm fairly confident from a math standpoint or financial standpoint, that's where I can make more money. Um, do you think that's something that's going to resonate, or is the average American just going to say, I can't sacrifice my own dollars just to make a little point? That it's kind of like those people that say, well, I'm not going to go vote this year because what's my one little vote count?
Yeah.
It's similar, but now you're asking them to do that with their money. Do you think that can have an impact, or do you think it's going to have to be more led from the government, or
I think it's
that?
gonna, I think it can have an impact. I think it's gonna start small. I'm actually building some financial technology that I believe people can use to identify companies that, have good prospects of success, but that also um, better reflect their personal values and that we can all have, portfolios of stocks of 15 to 25 companies that we actually know a little bit about. Maybe we read at least the first couple of pages of the annual reports, and that represent a fairly balanced, diversified basket of stocks. So,
Yeah,
and cryptocurrencies, for example. So,
sure.
so I think that in some ways, Brian, we're all being forced into the asset management business. And, we're all hedge funds today because there's nowhere to hide. You can't earn interest anywhere. And really the world is kind of becoming increasingly financialized. I see social media as basically kind of a mirror of electronic financial markets, and having kind of grown out of electronic financial markets, which is pretty interesting way to look at it. Um,
Yep.
but I do think that financial technology and user experience, have evolved to such a sophisticated level that it really is within our reach for people to build and manage their own portfolios of individual equities or assets, and to do it in a pretty savvy way, with the support of machine learning and artificial intelligence. So I think that's within reach, and I think that a lot of young people in particular, it's important to them. It's important to me, so.
And it's true, because as we're having this conversation, I thought of there's a lot of clean energy funds and green funds that are out there that started out as kind of like an altruistic idea, but now may just be part of a sound financial portfolio. As we see more and more clean energy actually coming to the forefront. So that's hopefully there's more hope to go along with that.
I think so.
Yeah, no, very interesting. I know this was a very wide-ranging conversation, and we could just keep going and going, especially on technologies. Just and AI you referenced. It's just so fascinating.
Yes.
Is there anything else that you'd like to perhaps cover or mention, to our audience here?
I would just applaud everybody's interest in the markets. I think that the influence that we can have in markets is undervalued, and it's a lot of fun too. So I'm really excited about the younger generation's interest in markets. I was concerned for a number of years about the lack of interest, so I think it's a really exciting time, and I would encourage everybody to keep digging into it and take a long-term view, and don't let your attention be controlled by the kind of short-term slot machine dopamine hit internet that everybody's spending so much time on today. So it's really fun to be an investor. It's fun to learn about companies. It's fun to be owners of businesses, and I think if we all take a little more personal responsibility for that, we can all help create a better world.
I like it. I love it. And just perhaps in closing, I know you said that you got into this whole realm started, correct me if I'm wrong, but on the interest for seasonality investing.
Well, I got started in investing back in 1998, when the internet boom and subsequent bust was happening into 2000. And one of the first things I really started looking into after, my heights of glory and depths of despair that were, shared by many during that time, was seasonality. So one of the first websites I ever developed was called seasonaltrader.com, still out there today, actually. And then I helped bring trailing stop losses to the world through a site that I developed called tradestops.com. And now I'm developing some new financial technology, which is not publicly available yet, but you can get a little idea at risksmith.com.
At risksmith.com. And that's what I thought might be a good closing point is, for our listeners out there, I know there's a lot of millennials that are probably hearing this. Anything particularly from just a general education standpoint, be it a favorite book or something that you've seen that you might recommend as a good starting point for someone that says, hey, I want to learn some more about all of this?
Yeah, well, I write regularly at drrichardsmith.com, so anybody can sign up there and follow my work in the risk rituals. But, a lot of my interest is in behavioral finance and behavioral psychology. It's part of the reason why I'm so upset at big tech, because I know too much about it and I know how they're abusing behavioral psychology. So, but a lot of what I've learned comes from authors like the author of Atomic Habits, who I can't think of his name right now, but James Clear there. Atomic Habits is a wonderful book just about kind of the technology of habits, right? How habits are created. And those, understanding that better, then you can see how technology is actually shaping our habits and creating habits for us that that we didn't really set out to create for ourselves in the first place, like how frequently we check our phones, right?
Yep.
Another author that I really like is Annie Duke. She was a World Series of Poker champion, and she's written some great books, Thinking in Bets, and more recently, How to Decide. So, behavior and habit are really the linchpins of success, certainly of successful investing, but I think just success more generally. So I think coming to understand how the world really is, increasingly rooted in probability and statistics and thinking in bets, and then how to make sure that you're developing and maintaining good habits that are going to pay off in the long run. Those are really the missing ingredients for many people who are interested in the markets. It's more than just data and tools and information, right? Because in the end, we're the ones who are making the decisions and pulling the triggers, and just like with eating well or exercising, you need good financial habits.
Yep.
And
Yeah, it all starts with the
it's
routine.
key.
Yep.
Routine, absolutely.
Yep. All right. Well, this was excellent, and I'm sure everyone has a lot to think about, if for nothing else, after this conversation.
Wonderful.
So, Richard, I thank you for your time and for coming on the show today.
Hey, thanks for having me, Brian. Take care.
You got it. Well, everyone, thank you for tuning in to another episode of the Caderna podcast. Again, I'm your host, Brian Caderna. Today, we had the pleasure of listening to Dr. Richard Smith, and definitely keep on tuning in because we'll bring you more and more great content as the weeks go on. See you next time. This podcast is intended for the general public and for informational purposes only. The show does not provide any recommendations or investment advice regarding any specific account type, service, strategy, or product, or to otherwise act in any fiduciary or other capacity. Please contact a financial professional for guidance and information that is specific to your situation. Brian Caderna does not provide tax or legal advice. Please contact your accountant or legal advisor to discuss your situation. Guest speakers and their firms are not affiliated with or endorsed by Park Avenue Securities, Guardian, or Caderna Financial Team, and opinions stated are their own. All investments contain risk and may lose value. Past performance is not a guarantee of future results. References to specific securities, asset classes, and financial markets are for illustrative purposes only and do not constitute a solicitation, offer, or recommendation to purchase or sell a security. Brian Caderna is a registered representative and financial advisor of Park Avenue Securities, LLC, PAS, OSJ 300 Broadacres Drive, Suite 175, Bloomfield, New Jersey, 07003. Phone number 973-244-4420. Securities products and advisory services offered through PAS, member FINRA SIPC. Financial representative of the Guardian Life Insurance Company of America, Guardian, New York, New York. PAS is a wholly owned subsidiary of Guardian. Caderna Financial Team is not an affiliate or subsidiary of PAS or Guardian. California Insurance License Number 0K04194.